Good evening. Well, fun and games in the S&P market last week, wasn't it? Now, as I said to you before, on that break of the all-time high at 21.34, our first target was 21.75. No surprise, we went up there, we stopped at 21.74.75. Do you know what? Near enough. Absolutely couldn't have showed you how these Fibonacci extensions work better if I'd have been the Fed pushing this market my very self. No surprise that we come off of there. But you know, we didn't really make any inroads that much on the downside. We've held really good support in the 21.44.42 area, and that was our break point on the top side after we broke 21.34. So we did hold some really good support. We've closed up. We had quite a good close on Friday, really, and there doesn't seem to be any reason we can't trade higher this week. The only concern is that on the daily stochastics we're a little bit overcooked. I'll just show you the daily chart so that you can see what I mean. You can see here we've just about reached our 95, 96 area on the stochastics, and it is turning a little bit on the daily. That isn't to say we're going to puke out of sight. I don't think we're going to, but there is a chance that we can come back down and test that 21.44.42 area once again. I think if we start to break down below 21.40, there'll be a little bit of a follow through on the downside, but you've got natural support from the previous all-time highs at 21.34, and I think that is where you're going to see people coming back in and buying the market. I can't see it really going much below that, and if it does, then we need to, when we're buying, we need to really put our stops where we're not going to get stopped out on silly little levels. So really down below here, I think, down below this 21.20 area. So if we're buying down to 34, we want to keep our stops below 21.18, and that should really take care of anybody trying to spoof the market and trying to push it lower. If it goes below there, then it really is going to go lower, and we have to rethink again. So we've talked about these Fibonacci extensions. I hope I've showed you how they work. You know, it is not a coincidence that we reached 21.75. If anybody can give me another reason why that S&P stopped at 21.75, seriously, I'm open to listening. But for me, it's all about the technicals and the charts, and you know, these work. As I said to you right at the beginning of the week, I am not the only one that does this Fibonacci extension, and it's been proved. You know, I wasn't the only one that saw this. Others saw it. It got pushed to our target of 21.75. Down we came. Now the exciting bit comes is if we break 71.75 this week, where can we go? Well, our Fibonacci extension 38.2 comes in at 22.03. So write that down. Now obviously at 2200 you've got round figuritis, so it'd be no surprise if you see people coming in and selling just in front of that 2200, 2203 area. Another interesting point is if we do break through 2203, our 50% extension comes in at 2222, and that is a weekly upward sloping trend line I've just connected lots of highs to, and it just gives you a projected measured or projected trend line. and that is where the market should head for. Now that's obviously a long way away, and we're not even out of the woods yet by clearing the 21.75. This is what we have to do to take the pressure off the downside. Now if we get to 21.70 this week and we look like we're not going to go any further, we're going to be selling because of these stochastics that are overbought. We're going to be selling, and we're going to look to buy them back at around the 21.44-42 area. We're going to go short below 21.40 for 21.34, where we're going to buy once again.